Thank you for joining me today, and thank you for your interest in learning about how we here at Wespath incorporate the social principles, sustainability best practices, ESG, impact investing, all those things into your retirement portfolio. As I said, my name is Ryan. I'm an analyst on our Sustainable Investment Stewardship team, and in that role, I support our efforts to integrate sustainability factors, ESG, the social principles, all the things I just mentioned that we do, I'm helping out with. And I execute what's called stewardship strategies. And I'm purposely throwing a bunch of terms that we don't know what they mean necessarily out there because we're going to define all those for you today. That's going to be kind of the body of the presentation. But I think the thing to know right off the bat is we're largely doing what's called shareholder engagement and voting at company meetings. Those are two things we're going to talk about as specific strategies. We're going to talk about how the way we approach that aligns with the social principles, with sustainability best practices. We're going to talk about what sustainability is. We're going to talk about what ESG is, what ESG isn't. We're going to talk about what we do versus what maybe other options out there in the investment market do. Really, my goal today is to provide an overview of all those things, just cover the basics, the 101, explain how that kind of impacts your investment portfolio, your retirement savings. And we're going to talk about kind of how that aligns with the things, and hopefully how that aligns with the things that you care about as a leader in the UMC community. My pitch here, my rah-rah speech at the beginning is just that I think the business and financial landscape is changing. What companies say and do is different than it was 10, 20, 30 years ago. More so than ever before, corporate leaders are being asked to consider non-financial ESG, social sustainability themes and factors into their decision making. And that necessity, the necessity to be thinking about those things, is elevated for those of us with a focus on mission. We want the companies in which we invest to make the best decisions, but we also want to be confident that our investment process, that what we're doing, is aligned with our values. In short, from this presentation, I want you to know more about your investments, and I want you to feel more comfortable that your savings are being managed in a way that makes you excited. Investments, finance doesn't need to be boring. It can be fun and exciting, and I hope we get some of that from today's presentation. To do that, we're going to be taking a look through our virtual magnifying glasses. We're going to dissect the name of my team. We're going to talk about these specific three words: sustainable, investment, and stewardship. Each of them tells a story about what we do, what I do, what my teammates and my manager does. And I wanted to find them all for you so that we're all on the same page. And just to make things a little bit more confusing, if three words wasn't enough already, I'm going to do it out of order because I'm going to start with investment, which I think is really the foundation for everything we do. So it makes more sense to start there. Why start with investment? Well, I think it's the first word that a lot of people associate with what we do here at Wespath. When you hear Wespath, what do you think of? Well, first of all, our full name is Wespath Benefits and Investments. So it's right there in the official title. When I walk into the building, it's on the name of our building. But it's also because it's really one of our primary functions as an organization and as a service provider to you. But what does it mean? What is investing? What are we trying to accomplish by investing? Well, to me, I think investing is your alternative to stashing your savings in cash under the mattress or in a suitcase somewhere in your house, right? Cash is, of course, a relatively safe asset, all things considered. Your biggest risk in that case might be an intruder or a house fire or some other accident, but you're really missing out on a big opportunity, and that opportunity is to grow that cash, to invest it in various assets, and to eventually have more than what you started with, which ultimately is going to help you achieve a financial goal like being able to retire comfortably. Different people invest for different reasons and to achieve different financial goals. Maybe it's to set aside some money for college or their kids' college. Maybe it's to, in a few years, pay down debt or to be able to afford a house. In our case with retirement savings, it's to be able to finish working at some point and to continue living comfortably. So that's kind of the main reason why people invest. What is investing, right? It's a little different than speculation. It's not gambling. We aren't necessarily gambling our money away, right? We're investing in assets and strategies that have a history of success, and that are regulated in various markets. And it's not just saving, right? I said we have an alternative. We could just keep our cash hidden. We could put it away somewhere, right? But investing is a little bit more active than that. We're putting it to work. We're doing something with it. And so I think that it's important to call out that activity and to recognize that investing, it requires some work and it requires some due diligence to do it correctly. And that's where we come in. That's what we think we offer you all is really doing that work for you, most of that work for you, doing most of that due diligence for you, and hopefully making things really simple on your end, as simple as logging into Benefits Access and checking out your quarterly statements and just keeping an eye on us here and there. And then I wanted to just recognize that some of us are more visual learners. So this is an illustration here of the investment process. I think this could be a depiction of any investment process. We've got the Wespath logos here. So it's a very simplified depiction of our investment process too. And I think the thing to notice here is that it's circular, right? Wespath, and more literally the funds that we offer, the funds that you see on Benefits Access, they invest in companies. Those companies create value. That value is the return on the investment that goes and shows up in your Benefits Access account, or in the case of a defined benefit pension plan, the same check over and over again, something that provides security for that plan into the future. All that then keeps kind of getting invested in companies that keep doing things and creating long-term value and returns, which eventually kind of has this snowballing and magnifying effect where over the long term, you were able to grow those savings considerably. I'm going to use the term long-term a bunch today, right? And I think it's because for most of us, most of our financial goals aren't necessarily just tomorrow or next year. They're several years into the future, maybe even decades into the future. And so, we think of investing, generally speaking, as a long-term process, and saving more generally as a long-term process. But that's really investment, right? We've defined one of our key terms, one of our 3 key terms of sustainable investment stewardship. And I think this makes sense, right? This is what we do. This is what we see on Benefits Access. This is what our role is. So what do these other words have to do with it? Well, that's what we'll start at the front again. We'll go to sustainability, and that first word. What does that mean, right? Why do we care about that with investments? There's probably a million definitions I could include here. We're just going to grab one from the United Nations, which is to say that sustainability means meeting the needs of the present without compromising the ability of future generations to meet their own needs. So trying to do what we need to do today in a way that we can continue doing that, future generations can continue doing that long into the future. So sustainable investing then, in its most simple form, is just the application of this principle into our investment work. It serves the financial purpose as well. It's not just it's not just environmental concerns or environmental sustainability. There's a clear financial and investment connection too, right? Companies that manage sustainability themes better tend to better manage risks and opportunities in general, which ultimately makes them stronger long-term investments. In other words, some of these things that we're talking about, they're not just things that make us feel good or things that are good for the environment. These are things that have clear financial and economic implications. In some cases, things that are better for the environment just make better business sense. If you're going to get fined for polluting, that doesn't make good business sense to keep polluting. And so it's little things like that are where the clear financial connections come in. When we're talking about investing in a lot of companies, those little things stack up and they end up being big picture, really holistic issues. And so that's kind of sustainability in a nutshell. Now, the other thing, and you saw this in the title of this presentation, and you likely have heard of it, or you may interacted out there in the investing world, or on Wall Street Journal or CNBC, or you might hear it on the news. This term ESG, and this is an acronym. It stands for Environmental, Social, and Governance. And I think this is found a lot of times either adjacent to or as a synonym for sustainable investing. People swap those two terms around. And we had a discussion about this in the previous breakout room, kind of what this is and what this isn't. I think that there's a little bit of can be a misconception that there are companies that are just ESG companies, or there are companies that are better at ESG. And so an ESG investor just invests in all the ESG companies, or invests in the ones that are better at ESG or that are rated, have a higher ESG ranking, and they just invest in those ones, and then they sell all the other companies, or they don't invest in poor performing companies or non-ESG companies. We'll talk more about that at the end of the presentation. It's a little bit different, I think. I think that's a slight mischaracterization of it. I think what's important to remember here is just all these words are describing types of behaviors, types of decisions and activities and things that companies deal with. Generally speaking, these are non-financial factors. So they're non-financial factors that affect how a company performs their business or their service or delivers their product, right? It's not necessarily revenue, it's not necessarily sales, it's not necessarily profits, or for my big finance heads out there, EBITDA or any of those other metrics that you might find in an accounting form. It's different than that, but these are things that are still relevant to the success of a company, and they're relevant to pretty much all companies. Different factors are more relevant to others in different industries and based off of all sorts of different characteristics. But the safety of one's employees, how often there are workplace hazard incidents, how often an employee gets hurt or injured at work, that is a governance and a social concern, right? That doesn't necessarily show up on the balance sheet, doesn't necessarily have that as a line item, but it is an ESG factor. And that's really something that's going to affect that's relevant in some capacity to every company. They're going to be tracking that information or concerned about, having a safe workplace. So it's not necessarily that there are ESG companies and non-ESG companies. It's just that ESG nowadays is one of those things, just like sales and profits and margin, that companies care about for how well they're performing. And for us, in our investment beliefs, which we have an excerpt of on the side here at Wespath, we think these things matter to how we invest and how we manage the funds that are invested on your behalf. We think that for an investor, integrating ESG factors into the selection and management of investments positively affects long-term performance, which is a good thing. Going back to our illustration, that performance grows and swells and magnifies over time, and we reach our financial goals, which is a positive. Another way to think about ESG, very generally speaking, is that a company that handles ESG factors better is likely to be more sustainable in the long run. So I think that's why, getting back to, is ESG a synonym for sustainability? Maybe not necessarily, but I think that's why so many people use those terms interchangeably in our area of the industry. It's just that companies that manage their environmental impact, their social impact, that are better managed by smarter and better and more diverse leaders, those are companies that are likely to stick around in the future. And so sticking around in the future is sustainability, and so there's the connection, right? So sustainability and ESG are terms that are used everywhere throughout the industry. We've got other pension and retirement funds that do very similar things to us that use those terms. Asset management firms, if you have a different retirement savings plan somewhere else, or if you have a E-Trade account that you have open as well, you're going to see terms like that in company reports and analysis and things like that. But we're going to get more Wespath specific here. We're going to talk about our vision or our definition of sustainability, and then ultimately how that connects back to the UMC and the social principles. But before we do this, and maybe you can do an instant reaction to the slide if you want to, but before we do that, we've talked about sustainability, we've talked about ESG. I just want to pause there. Do you have any questions so far? Anything that sticks out to people or that could use more clarification before I jump into the Wespath stuff? All right, all good. I'm going to take a swig of water and then we'll get back on track here. All right, so again, we've just used industry terms thus far, but we've done a bit of our own wordsmithing here at Wespath, and we've really made these concepts our own by creating a proprietary view of a sustainable global economy. And it is our belief that a sustainable economy is going to be what's necessary to deliver the returns of our participants, that you will rely on well into the future. Makes sense, right? If we have an unsustainable economy, it's one that can't go, can't sustain itself into the future. And we do think that there are some things we need to work on here. And we've defined that by saying, hey, a sustainable economy is one that recognizes the economic importance of social cohesion, long-term prosperity for all, and environmental health. Now, I get those are really abstract, big pillars, right? So what am I talking about here in plainer English? Well, we think about a lot of big picture sustainability issues. We think that they merit consideration as we invest. These are things like affordable housing, climate change and environmental justice, diversity, equity, inclusion, societal challenges, specific problems we're facing in society, like the opioid epidemic, human rights, labor rights, the COVID-19 pandemic, the equitable distribution of COVID vaccines. The list goes on. There's more than what I've said out loud and what's on this slide. But those specific societal challenges and sustainability, things that get in the way of true economic sustainability, those are things we're trying to think about how we can affect positive change on as we invest. Now, if you're looking at these themes or you heard what I just said out loud and you're thinking to yourself, hey, I know a document that talks a lot about those. I know a church that cares a lot about those. You're very correct. And that is not by accident. As you can see here on this slide, we've thought a lot about how our work on sustainable investing can and does align with the social principles. We do see a ton of correlation between our vision of a sustainable economy and the values of the UMC. We work for you all. So if there wasn't that alignment, I think we'd have a problem, but we do have that alignment. Because we know that through your work, you're being asked to, and have really committed to, caring for God's creation, advocating for and protecting for the rights of others, and being a positive force in your communities. We get that. And what's really neat is, as I mentioned earlier, that type of stuff also really heavily aligns with the stuff that makes businesses better at being businesses. This makes companies more sustainable over the long term. And as an investor in businesses and companies, right, of course we would want people to be thinking about those types of things. Now, I got to say, not every social principle at all times has a clear economic or investment implication. So we have to do a bit of organizing and prioritizing. But we have done that. And I just wanted to show a really simple illustration of how we kind of line up our work, right? We think about identifying those sustainability and sustainable business practices. We think about the UMC social principles, and where they intersect is where we spend our time and where I, as a member of the SIS team, start working, essentially. Things branch off from there. We go into specifics that maybe aren't necessarily covered by the social principles, or things that have financial implications that there isn't necessarily a clear social principle attached to. But generally speaking, I think this Venn diagram shows you kind of where we get started. And so we talked a lot about the why we do what we do so far, because we serve you and the UMC community, and because we think these things are really important to the economy and how investments function. But I want to talk more about the what and the how. That's the tools and the tactics that we use to do any of this stuff, to make anything happen, to get change going, and to make companies more sustainable, or to help them be more sustainable. But before we get into the why and the how, I just wanted to stop again. Any questions on what we've covered so far, how the social principles come into play, any of our sustainability themes, any questions whatsoever? I'll pause for another quick second.
Ryan, we did get a question in through the chat. We've got, do you have any stats demonstrating ESG positively affects long-term investment performance?
Yeah, I think big picture, we can pull some data, and then down to the specific ESG themes. we can pull some data. I don't have numbers in front of me, so I don't want to give any incorrect information. But I'd be happy to connect after this with some of our go-to research that we've done or that our partners have done. Angela, I don't know if my email is still in there from the previous one.
I'll add it again.
Okay, great. Yeah, just with numbers specifically, I want to make sure I'm doing everything right, the right justice. We certainly do have a variety of places we look to for key research and support on that. So, you know, we're not trying to fly blindly into that area. Great. I think that's a really important question. So thank you for asking it. You know, I think we don't want to do anything really, whether it's ESG or you know, looking at certain themes or styles and in investing, large cap, small cap investing. We don't want to do anything with no evidence, right? And so when we think about our investment philosophy and our investment beliefs, these are things that our investments division and really all the way up to our senior leadership team has super high conviction on because of experience in the industry, research, data, you know, trends as they happen now, or long-term kind of macroeconomic trends. So, you know, we certainly want to have high conviction about any of the decisions that we're making. All right, so let's resituate ourselves here with another look at that investment process that I showed earlier. And I just want to point out the sustainable investment process. It's no different, really. It's not even separate. To me, it's not like adding it's not like doing something off to the side, or that there's a new or different way of approaching this. It's just adding a filter to the process, adding another lens to the process. We essentially just add sustainability and ESG considerations at different stages of this circular thing that we depicted earlier, and that's to affect better outcomes. But again, as I promised, we're talking specific tactics, right? That's words in a word bubble. What am I actually talking about? So what do we actually do to go about creating those better outcomes and supporting a more sustainable economy? Getting back to, we look through our magnifying glass, we define sustainable, and we defined investment. There's one more word left to define, and that's stewardship. How your investments actually make a positive impact, how we make a positive impact on the things that we mentioned earlier. And stewardship is really engagement in proxy voting. Some people might even just say proxy voting is another form of engagement, so we won't even necessarily distinguish that. We'll just say engagement, very generally speaking, dialogue, making our voice heard at companies with the tools that we have available to us as an investor. You know, as a shareholder, we actually invest in thousands of companies. So we have the right, you know, as a shareholder, we're granted certain rights and certain things that make sense for us to be doing as a partial investor in those, or partial owner in those companies. And part of that is that right to engagement and to affect and influence company decisions. We actually have what are called annual shareholder meetings, where things go up for vote, and we can actually vote on resolutions that other investors have suggested. We vote and elect the board of directors at companies. Things like that are kind of how we make our voices heard. And we'll have meetings with companies too. In between shareholder meetings, we'll sit down and have a meeting with company management or their investor relations team. So it's an ongoing dialogue. It's different ways that we can make our voices heard. But as an investor, companies listen. The other thing to know is we're a client of external asset managers who we can engage as well. We'll get more into specific examples of that later, but I just want to make that point known that there's other channels for us to engage in. And then also we can talk to policymakers and government regulators, right? These folks make the rules and the laws that influence our ability to support a sustainable economy, and they influence the rules and the laws that companies themselves have to operate under. So, you know, oftentimes they want to hear from investors, hey, what would be helpful? That, you know, of course, the SEC is super involved in it, but even other regulatory bodies want to hear from the investor perspective of, what would be helpful for investors to know about before or after they make an investment in a company. And so that's part of the engagement process as well. Our stewardship work is all of these things at various times across various themes, but it all comes back to our vision for a sustainable economy. We try to tie all of it back to that, all of it back to the things that we think really matter to investment performance, and, as I mentioned, the social principles. So let's just put this into practice here with a couple examples. One of the sustainability themes I called out earlier was the opioid epidemic. I'm sure you're all aware of its wide-reaching impact. It's touched countless lives across countless neighborhoods throughout America and beyond. And this is a devastating social outcome. It puts lives at risk. It disrupts families. It puts an immeasurable toll on our communities. And part of that toll, too, is an economic one. Higher healthcare costs, lower productivity, lawsuits related to opioid producers and distributors who have contributed to the epidemic through irresponsible behavior. There is an economic and financial impact here. And so recognizing this, Wespath, a few years ago, we joined this group called the Investors for Opioid and Pharmaceutical Accountability, or the IOPA. Now, in both of the examples I'm going to show, I talk about us working with groups of like-minded investors. And this is a really good tactic for us just because it kind of elevates our voice a little bit. Companies listen to investors, but they definitely listen to a bunch of investors once coming together at the same time on one specific issue. So that's what the IOPA is, right? It's a network of investors who think like we do about the opioid epidemic, who are working together using the tools we mentioned earlier to address the epidemic. And we're really extremely proud to have a leadership role in the group. My colleague Chirag Acharya actually is the co-lead of the IOPA. He's one of the other sustainable investment stewardship analysts at Wespath. He helps sets the IOPA priorities, organizes its efforts, really at the forefront of this work, which is awesome. And this group continues to engage opioid producers and healthcare companies on the responsible management of the opioid business. And even in more recent years, taking a bigger picture view of the pharmaceutical industry as well. We have this engagement with Rite Aid and several other pharmaceutical retailers. And that one's focused on COVID-19 workplace safety and health protocols. And so they've kind of moved beyond opioids even into trying to affect positive change throughout the industry. And this is just a snapshot. I'm not doing it enough justice. It's just a snapshot of what IOP has been up to lately. If you're interested in hearing more stories, please let me know. I'd be happy to share some additional resources. I think Angel's already thrown my email on the chat, so that's a good starting place for sure. I'm going to say, talk to me for more resources a couple more times as we get to the end here. I found that slides aren't a great place to send links out to. So if you want to read more about any of the things I mentioned, I'm happy to connect you. The other thing I would point out, or one of the other examples I want to show is this Climate Action 100 engagement with Chevron. Before we jump into Chevron specifically, I just say, again, Climate Action 100 is one of those groups, one of those networks that are focused on specific themes. In this case, the theme is climate change, and really more generally, the transition to a lower carbon economy. This group engages over 100 now of the world's highest emitting companies on the need to transition their business models in alignment with a more sustainable future. So we lead the engagement with Chevron alongside a bunch of like-minded investors in Climate Action 100. And we think it's a really big deal because, who here has visited a Chevron gas station in the past week or driven past one? This is a very recognizable brand in the oil and gas industry. And of course, it's a very large and influential company. And so we think it's really important that Chevron and companies like it start to transition to renewable energy, start to consider lower carbon solutions, start to consider what the growth of renewables or low carbon solutions might mean for its business model and therefore its investors. And so what we do is we sit down with company management, we have meetings together with those fellow investors, and we make our expectations clear. We talk about the things that we're concerned about, and we try to find solutions together. And as I've mentioned, we found that management listens. Through the years, we've seen Chevron pick up the momentum in this transition. whether it's starting to report more thoroughly on their long-term plans, issuing some of the first ever, climate transition plans in this industry, or setting emissions reduction targets, tying that to executive pay, which adds in kind of an accountability layer. And then in Q4, which is end of last year, Chevron announced a new net zero target, which covered the use of its products, which of course, for an oil company is a big part of its footprint. So we thought that was a really exciting development, and one that the investor group helped influence. So there's a couple examples there with Chevron in the IOPA of stewardship at work. And then this is getting in a little bit more into the weeds, so apologies if it's a little bit more confusing. We'll try to walk through it here. One additional tool that we have in our toolkit regarding sustainable investment stewardship is that of working with our external asset managers. Now, I can hear some of you wondering, maybe external asset managers, like I thought Wespath was my asset manager. Why do I care about BlackRock or JP Morgan? Yes, we do serve kind of in that asset management role with you. But for day-to-day management and strategy execution, we actually do work with a network of external managers that do a lot of the heavy lifting. So in other words, if you log into Benefits Access and you elect to, or you see that LifeStage has allocated you to our US equity fund, which is USEF, we've constructed that fund. We've set a lot of the kind of big picture strategy for it. We handle all the maintenance of it and making sure you have access to it, making sure that there's just one product for you on Benefits Access. But it's actually constructed of a bunch of different little strategies that all have their own unique goals, and all these different asset managers manage those unique goals. And so kind of sticking with that, talking to folks where we have a piece of a leverage point with, same ideas, sitting down with companies, we sit down with our external asset managers and we talk through how they integrate sustainability best practices into the work they do for us. Hey, we have this vision for a sustainable economy. Hey, we care about these principles and values. Talk to us about how you are either aligned, or if we're not aligned, how we can work together to become more aligned. So that's another leverage point, another thing that our team is up to kind of on a day-to-day, weekly basis, is trying to check in and keep that oversight. So that's a lot. We've now successfully digested and defined our 3 terms: sustainable investment and stewardship. I'm going to take a breather here. I'm going to take another swig of water. See if anyone has any thoughts on what we've talked about thus far, or really anything that has come to mind so far in this conversation.
We do have one question in from the chat, going back to the engagements. So who goes to the shareholder meetings and dialogues with the policymakers?
Yeah, great question. Me, sometimes. My colleague Chirag that I mentioned, we have another member of our sustainable investment stewardship team, our director, Jake Barnett. That's our SIS team right there, the 3 of us. It might be all the way up to our CIO has attended shareholder meetings, Dave Zellner. Everyone in the investments division is involved in the stewardship process at some point. We certainly used to actually go to meetings, if for many of you might know, but they've largely transitioned to virtual or hybrid meetings somewhat recently over the last few days, few years. COVID certainly exacerbated that. Most of the ones this year are online, and so going to it now is more like logging into the virtual meetings. But yeah, when we've had things to talk about at meetings, at the shareholder meetings, we've definitely presented and made comments. And then the voting part of that takes place through proxy voting. So we're voting by proxy, which is kind of through an online platform. The kind of that happens once a year, those annual shareholder meetings, and then those other meetings where we're sitting down with the investor networks and the company management. That's happening kind of on a ongoing basis throughout the year. It might, we might meet with a management team 2 or 3 times a year. And then on the policymakers, it kind of just depends on the issue, who has the expertise, who is focused on the thing that we may or may not be commenting on. So Last year, the EPA, Environmental Protection Agency, was working on a rule related to methane emissions. And so a few people on our team who are more informed on methane emissions and greenhouse gas emissions put together a response to that, what we would like to see in methane reporting. I'm really excited this year. We're expecting the SEC to have a comment making period for what's called human capital management disclosure. So we'll have a chance to respond to the SEC about how we feel public companies should be reporting on, things like workforce turnover, workforce diversity. So it's kind of spread out. Those responsibilities are kind of spread out throughout the team. But definitely great question. Thank you for asking that.
Okay, we're getting more questions in. Okay,
Awesome.
next. How are corporations chosen? I noticed Shell and Google and Walmart in the slides.
Yeah, so great question. I would go back to here, right? Like, we can't possibly engage every single company that we invest in. As I mentioned, we do invest in really thousands of companies. And so we try to prioritize, again, with kind of our vision for a sustainable economy and our connection to the UMC social principles. The specific companies that were in this illustration, that actually goes back all the way to just our basic overview of our entire investment process, just as a way to show that we're invested in kind of a diverse range of a bunch of different companies. When it comes to choosing which companies to engage on a sustainability basis, again, it's kind of our process for prioritizing issues, the types of things our external asset managers are bringing to us, or maybe the large holdings that they have, companies that are either leading or lagging on some of these big picture issues that we're thinking about, or, in the case where we work with a network like the IOPA or Climate Action 100, it's what are their priorities at that time? What are maybe some of the companies that are sticking out to that group? So it kind of all depends. I don't want to keep saying it all depends for every question, but it is kind of in flux when it comes to that prioritization.
Awesome, thank you. So we've got one on budget. Will we have access to the Wespath annual budget and performance report?
Yeah, for sure. We report out all of our financial information and the performance of our funds. The performance of our funds are updated daily on our website. So if you want to keep an eye on the funds, the website is your friend. Annual reports and financial information is compiled in our annual report, which is published every spring. I actually don't know off the top of my head if our 2021 report is out yet, but if it isn't, it's very close to be, or it may be on our website already. So yeah, for sure, it's a publicly available document that we work on every year.
Awesome, thank you. And just one last, we have a nice comment from Katie. I had no idea this was happening with our investments, so this is really exciting for me. Thank you for your work in advocating for more sustainable and ESG focused companies.
Awesome, thank you. We appreciate it. Love to hear that feedback. I have one more thing to share with you if we have a few more minutes here, which we do. So one other thing that is in our funds that I just wanted to talk about, because I think it's often associated with a bunch of the stuff we just talked about, is impact investing. Now, earlier I said some of the work that we do makes a positive impact. And I'm not trying to be confusing here. I know we're using impact in two different contexts, but we do think all of the work we do makes a positive impact, or at least we hope. And it's one of the best things that I get to do, or one of my favorite things about my job is that I get to work on behalf of you all, making a real impact on issues that you care about, that I get to hear positive comments like that one that was just in the chat. So, but with impact investing, we're talking about something a little different and a little bit more specific. So for us, an impact investment is one in which we invest in a specific initiative that has the stated objective of doing two things: delivering an investment return and strengthening a local or global community, or positively contributing to an environmental issue. Those two measurables, we're measuring the positive impact and the return of it. And that's an intentional type of impact investment. And this is something that you do have exposure to, right? So in our impact investments, these are found in the funds in which you invest as a Wespath participant. And so you do have, I'm going to jump into a specific example. You have exposure to this specific example through our funds. And that is our longest running impact initiative, which is the Positive Social Purpose Lending Program, or the PSP program, you might hear it called as well. Celebrated its 30th anniversary in 2020, so we're going on 32 this year. Through those years, we've invested more than $2 billion, which has gone on to create or preserve over 52,000 affordable housing units. So again, there's that impact, that impact on society, that the housing units, and then we can kind of measure the performance too, which is the other form of outcome for the investment. Beyond affordable housing, we do community development investments. We do a little bit of international microfinance in foreign markets as well, which is all great. I'm going to jump into a few examples. Maybe you live close to one of these, or maybe one of them is in your annual conference. One of our investments down in Florida. This is a great example of a traditional affordable housing property, 80 units. We've invested over $1 million into the project. 1, 2, 3 bedroom apartments for families. Amenities on site, whether it's a grocery store or a community center, a swimming pool. This is a classic kind of affordable housing type investment. And then this is one of our older ones out in California, but it's a great example of the community development ones that I was just talking about. This is a health care center, the Native American Health Center. It actually offers services, does have some specific programming for Indigenous peoples, but is offered to the whole community as well. Provides medical and dental services, behavioral health services, all sorts of great kind of health services to the local community in Oakland. So a good example of another type of investment that PSP might make. And so then one question I wanted to address, and this came up in our last conversation, so I wanted to make sure we had a minute to address it. I just wanted to point out the thing that we're not. And I think that some people will have some familiarity with the term ESG these days. I think it's getting more media attention, right? And that's thanks in large part to a huge growth in assets out in the market that claim to be integrating ESG. And I don't mean to say claim to because I'm skeptical. I mean, everyone has different processes. There are different ways to go about this. But what they're doing with something like this product is not necessarily what we're doing. And I hope by going through all the examples of what we are doing, we can see that now. This is one of the larger U.S. equities ESG funds out in the marketplace. If you have a different account somewhere else, you could hypothetically invest in this. It's based on the ESG ranking of a firm, a ratings agency called MSCI. They do great work. I'm not picking on them for any specific reason. I'm just trying to point out that what they do here is invest more into the companies that MSCI has rated higher on their ESG ranking, which means it's a single ranking, single provider type of system. And I just point that out because to me, that means if I invest in this, I have high conviction on MSCI's process and the way that MSCI rates things, which is ultimately a proprietary process. They're going to tell you a lot about what they do, but they're going to keep some of it in-house, and it's not something that's custom tailored to your values and what you care about. It's not something that necessarily has huge alignment with the social principles, as we pointed out earlier, or it's not something where they'll necessarily sit down with you in a webinar like this and talk you through it and hear your feedback and have you be part of the process. So I don't want to pick on one specific thing over the other. I just wanted to point out that we are a little different than just something that's an ESG fund. And we hope that can connect with you a little bit better. We are at time. I had a couple tips here. I will leave them here on how you can make more sustainable personal finance decisions in your everyday life. And yeah, I think the other slide we had was just a couple resources as we wrap up. Check out our website, check out our sustainable investment report, check out our social media, follow us on social media, and you'll stay in touch with all the latest that we're doing. But I am just going to hover. I'm going to hover on my tips, tips and tricks slide, so we can end on that. And yeah, if there are any final questions, I'll be hanging out for a few more minutes. You're just playing out music, so I think we have to go. But thank you all for coming. I really appreciate it. It's great.